Well, good morning, everybody. How you doing in America? Another beautiful Bali day has transpired. Let's get this set up and going. What kind of trades you guys looking at today? Hey, there we go. Got my scanner going. We'll get this going on. Let me know if my volume's okay. Let me know if the music's too loud. Not quite set up here. I just finished dinner, guys. Had a late lunch, and a late lunch leads to a late dinner. Alright, this is the Fox with Stocks channel. We have over 200 subscribers now. Not a whole heck of a lot compared to YouTube standards, but hey. No paid advertising. Only a few Facebook posts every week. And only a couple months doing it. That's not too bad. But I'd sure love it if you guys shared it with your friends and family. We've got a bunch of stocks to look at here today. Let's see if there's anything new compared to yesterday. I do want to take a moment and say thank you to Aubrey de Grey for starting the SENS Foundation, where they're taking a serious look at curing aging. He gave this TED Talk 2005, a roadmap to end aging. I recommend that you guys go check it out. If you guys are looking, I mean, it's one thing to get rich, but what do you do with all that money afterwards? Well, if you're going to give to a charity foundation, consider giving to his. It might be the best investment you ever made, even though you're giving away the money. Second best investment ever might be theoptionsoracle.com. They have a monthly newsletter, one of which comes out this Monday coming up. And they have a 30-day free trial. So as long as you make $100 or more using their newsletter, you could use that to pay for all the future newsletters. So you can start wheeling. You don't have to do all the work yourself. They give you the trades. They tell you the entry points, the bid price, the limit price, everything. So go check them out, and they even tell you when to close early. I've been using them for a year, so I highly recommend it. That's theoptionsoracle.com. AMC is currently trading, or was trading at 59.04 last night. I have no real interest in opening up a trade on this. It's what I call hot potato hand grenades. But currently trading at 58.68. Or 59.04, whichever is more accurate. And even if you reach down $11, you can get the 9.80 bid. Is that right? That is nuts. Giving you a 20% return in 23 days, unless it drops back down below $48. But why wouldn't it drop down below $48? Nothing but hype keeping that going. And look, you can make a lot of money on hype. But that's not how I would make it on Tastyworks. I would not be doing the wheel strategy. I would not be selling cash secured puts. I would be buying calls or trying to leverage up on margin. Maybe do it in an account where it won't infect your other accounts. But I'm definitely not recommending that. I'm just saying you could. Just saying you could. Give me a second here to get logged in. Workhorse is there, down to 14.15. It was above 15 last I really looked at it. You can sell the 13.50 bid, get $1.60. Gives you 11% in 23 days and a cash basis of about $11.90. That wouldn't be too bad on Workhorse, actually. Alright, we got that going. Not a big fan of Workhorse. but in terms of its price action, having a break even of $11.90, aka a cost basis of $11.90, would not be too terrible on this stock. They've touched as low as 8, but if you come back here, they were trading about 15, 14. When they dipped, they went back down to 14. When they crashed, they came back down to 16. They took a bit of a dive down to 8. I'd say 11.10 is about a pretty stable price for them going forward, but I have no plans on touching that. I've got enough money in Tesla. I don't need more money in EV companies. Same with FUV. I think they're more in the sports vehicle type arena, but still electric vehicles. Expo, I saw them a long time ago, but they're trading at $1.54. I'm not going to touch anything below a couple dollars. If they crash, it ain't coming back. It's getting delisted. I've seen Sava quite a few times on our list. We'll see the price action of that. Riot's going up again, $35 a piece. You can sell the 34, not too far out of the money. It's only $1. I wouldn't probably touch that. But you can sell it for $4.40. That does give you a good break even of $29.60 as long as Bitcoin keeps going up. I mean, you're basically playing that. You're basically selling cash secured puts on Bitcoin. They have obviously their own company and margins and profit and all this other stuff, but they're pretty tied to Bitcoin. Excuse me. I've got some puts active on Space. That's up $34.87. You can get $3.95 at the $33.50, giving you 11% in 37 days. So you could go deeper down, farther down if you wanted to. Blue Apron, not a big fan of that company, not going to touch it. Tilray, tried that once. Was a little bit shaky. Surprised it's not doing better. CleanSpark, they used to be their own company, now they're a Bitcoin mining company. They used to do a lot of other stuff, but now they're basically tied to Bitcoin. So if you're doing right in Mara, I don't see much reason to do CleanSpark. Kodak, $8.81. Getting close to $10 again. Let me know if you guys got any questions in the chat room. We got a live chat on YouTube, which is where you guys are watching it. If you're on mobile, it might be tricky to find. You might have to scroll down to look at it. Scroll around. But for everyone else, it's on the bottom right. Jumia is down to $27.80. They were at $35. I thought about buying them way back November. Yeah, when they were trading at 18, they hit a high of 60. Man, I wish I rode that train. Now they've come back down 27. They were at 35, 30-ish. The 30s, the 35. Jinx Solar, not touching solar. I'm already in Tesla. Tesla does solar. All right. Nothing really that I'm too excited about on my put sell option scanner. If you were looking for something, consider Riot, Mara, Space, and Tilray. So I'll leave those out there for you guys. Let's take a look at our watch list. So how do I want to do this? Let's get Yahoo up. Yeah, I'm not touching Sava on that. We're basically at all-time high again. All right, so let's do this. come over here and let's go check out our companies. BNGO is going back up again. They're up $2 since we added them to our list. This came out last month. Okay. I just want to quickly update our list with new prices. Wow, Nvidia shot up since we looked at it. 625 to 710. Tesla falling below 600 again. I don't like that. Whoa! If we touched Zedge, we would have made some money. A little bit of action on Disney. Not a big move. But look at this. Look at everything that was in my number 5 category here. Went from 551 to 773, 79 to 82, 625 to 710, 580 to 598, 1090 to 1783. And apps, we didn't record that, but now it's 6947. If you just bought and held all the things that I would ranked number 5, you would be up across the board right now. Significantly. Got 3 people watching, 3 likes. Hey, I appreciate that, guys. Hitting like and subscribe does help the channel, and that keeps me motivated to keep going. Neo's at 44.26 in the pre-market. We looked at it when it was 33. I was at the beach today talking to my buddy Peter. He's retired here in Bali, and he's gotten into trading. And he bought some Neo, then it dipped, and then it came back up, and then he sold it. I wonder if he knows that it's come back up again to 45. Well, I've been trying to show him the wheel strategy. He liked it, but he didn't fully understand the importance of starting with a cash secured put. You start with the cash secured put because then even if you accidentally bought at the highest it's going to be for a while, basically all-time high for the month, for the quarter, for the year, as long as you sold the cash secured put, you're not going to get it at the all-time high. You're going to get a discount. You're going to get a discount. And if you follow my strategy, you should get a 10, 15, or 20% discount before you get assigned the shares, so it's much easier to come back up to a previous level. And that he was buying shares, and then he was selling the covered calls, or sometimes he wasn't selling the covered calls. Oh, typed in the wrong signal and about flipped out. Yeah, so he was he started doing covered calls on some of his stocks, which is great, but did not fully understand the importance of starting with the cash secured put. If you start with the cash secured put, you basically prevent buying the all-time high, buying the, what do we want to call it? I don't want to say buying the tip, that sounds dirty. Buying the peak, you know? If you're ever one of those people that buys just as it's about to tip and go down, then you definitely want to switch to starting with cash secured puts, because that eliminates the ability to do that. Eliminates it. You can't possibly do it. Listen, if you're selling a cash secured put and your break even is 20% below it, you cannot get assigned unless it goes below your strike, and you don't lose money unless it goes below your break even. So you are immune for buying at the height the height of the market or the height of the stock. You're immune to it. You cannot do it. It's impossible. That is one of the huge advantages of using the wheel strategy, but you have to start with the cash secured put to do it. Now, if you double wheel, then you buy the stock and you immediately sell covered calls against the stock, and simultaneously you sell a cash secured put. So you're getting break even on the call side, and you're getting a lower break even on the cash secured put side. But if you want the most safety, then you just do a single wheel, okay, and you just start with the cash secured put. If you want better appreciation, if you really think the stock's going to go up and you think it's the right time to buy, then you want to double wheel it. You buy shares and you sell calls while simultaneously selling puts. It's going to tie up double the amount of capital, and it's not going to give you double the break even, okay? Don't misunderstand me. You're going to get a better break even just by selling cash secured puts, but you won't get any appreciation. If it moves up, you just get to close sooner. You don't have any ownership of the stock. So if you want ownership of the stock, wow. Surprised this one is up. This rate got a rating, it's got a 3 on my rating, and it's solar, so I'm not going to do it. But they are semiconductors for solar. They went up a lot. If you guys don't know what a cash secured put, I do need you to type in the chat room that you don't know what it is so that I can fully explain it, because otherwise I'm going to assume that you know what the deal is, and we're not gonna go over it in such detail. Palantir is a very, very popular meme stock. Only gets a 3 on my rating. My rating is mostly based on the fundamentals, cash on hand, the runway, and the debt ratio, okay? As well as I try to think about, I haven't figured out how to write it in the spreadsheet, what their future potential is in terms of their market sector. I should probably put in just a separate rating just for that. If you look at this though, most of the stocks that have come out here, the reason they're on this list is because they've passed the scan at some point to get some recommendation of a monthly return greater than 2%. And so we went ahead and looked at them, and they are pretty much up across the board right now. What is today? I'll put the date in there. Keep track of that. Got DraftKings on this list. They've been taking a hit, so we might see them go down. Ater only has a rating of 2 on my 1 out of 5, so they went down $2. So that makes me think my list is doing okay. DraftKings down. Well, it was up, but now it's down to 49.08. Still up from when I looked at it. But yeah, you can see here it was at 55, and now it's come down to 48. They did a merger, and some people think that, they think that the merger gave them exposure to a company that's been a little bit sketchy with letting people through for money laundering and stuff like that. That's just the rumors. I don't know if it's true or not, okay guys? But that might be one of the reasons that even though they acquired a company, that they're actually going down in value instead of up. And it could just be people taking profits, normal market sector rotation. Could be worries about, or even just the hype. They did a big deal in New York, but if you looked further into it, they were giving a lot of money to get that deal in New York. They were paying a lot in taxes. That was destroying the value of that deal that they put through. But you know, if people read the headlines, DraftKings approved for New York, they're going to go out, rush out and buy the stock. Stock's going to go up. Then they find out how much they're losing, how much they had to bid in taxes in order to get it. Then the hype starts to die down, and you know, it's like a hot air balloon, it deflates. This is not quite the southern rock sound I was going for. Let's change that over. If you guys want me to do any analysis on any stocks, let me know. I've already gone through our scanner. There's 4 things that I'm interested in, but I've got enough positions. We're going to have a lot of stuff expiring this weekend, so I'm not in a big rush to put anything on that unless I saw something amazing. So I'm mostly going to be going through our watch list and updating that. And at 9:30 in about 22 minutes, we're going to manage our positions. Take a look at that. I want to thank you guys for being in tune and watching this. It may not be the most exciting episode. I just think I'm going to start moving to some more scripted content for you guys. Something that you could watch this week, next month, a year later. I've noticed that the live replays don't get quite as much attention, which makes sense. But they're a lot more fun for me, especially when you guys are chatting in the chat room and we've got other ideas and deals and stuff going through or flying around, than doing those scripted stuff. That scripted stuff, there's so many takes, there's so many mistakes, and they have to be re-recorded. It's really painful to record those. Doing these are fun, but they don't get quite as much views as I had hoped. Carnival Cruise Line continues to surprise me. Now trading at $29. I bought at $8 once it crashed for COVID because they still had a lot of cash on hand, and they used to pay a $4 dividend. I figure if at $8 a share, if COVID passed over quickly and they ever got back to paying $4 a share in dividends, that'd be a 50% return in dividends. Okay, that one's not coming up for us. AI. That comes up on Walmart. But I dumped those at 21. I looked at the stock again. It went up to like 23, 22, came back down to 19. I did my analysis on the stock again. They had lost so much money in 1 year that their cash on hand was completely depleted. They basically had no runway left. And I decided, you know what? It's not as sound of a company as I want. And so I dropped it. It went up to 22 and I quickly sold it. I think I sold a covered call against it and let it get taken out at 21. Come on, Yahoo, what is going on? Why are you not getting some symbols? But surprising me is they're still trading at $28.92 now. If I had held it, I would be $8 richer. But I wouldn't be $8 richer in stress. I would have been stressing out if I held that deal after I reevaluated it. ARK gone from 103 to 115 since we last recorded it. I'm a big fan of ARK. I think most of the negative stuff that might come out about ARK or Kathy Woods is just FUD, negative publicity put out by other hedge funds that don't like her success. What is the deal with Yahoo today? It is not taking my symbols. You see this? BGFE, it's not searching for it at all right now. I'm more used to Walmart being that temperamental, not Yahoo. $26.41. Man, I wish I recorded their price previously. CCIV $22.30. CELH, yes, what are they doing? I want to know. 63.10, they've come down a lot. I guess the hype has died on them. But look at their revenue. Quarter over quarter is fantastic. Year over year is on par. The price has skyrocketed since June. Yeah, I mean, look at this. They touched the all-time high, and they ramped up there very quickly within a month. So if you're selling CELH, I do not blame you. Time to take profits. But I'm looking at this company, as a possible long short play, going long on them and then shorting something else in the food and beverage industry, and as they diverge, taking advantage of that. And you look, this debt to liabilities, they've got 40 million in debt, 148 in assets. It's almost 4 to 1. That's almost 25. It's probably closer to 30-ish%. Excuse me, I got back problems today. Some of this is goodwill and intangible assets. I like to discount those. I don't trust the brand value of things. So if we take 148 minus 13, you get 148 minus 13, again 135. 39 divided by 135, you're looking at 28, almost 30% debt ratio. They've got 31 million cash on hand, and they are net positive on income. They are not a negative company, even though they are growing. Revenue growth is up 70% for the last 4 quarters. They have been income positive. Okay. They turned positive in 2019. 2020, they still made a lot of money. People didn't stop drinking their favorite sodas just because of COVID. Okay? Yeah, they dipped, but that could have been all types of supply problems and supply chains issues and having workers out and stuff like that. Could be tons of things. Could be paying for people to be out of work for a bit. Meanwhile, they just continue to climb. So I want to find a good entry on CELH. I want to probably do a double wheel on this, and then I'm going to leverage a long position on it while I short something else. And that's why I've got this food and beverage 30 that I need to keep working on. If you guys want to help, you let me know. Okay, and these are 30 other companies in food and beverage, and I want to find the worst 2 or 3 companies in here and the best 2 or 3 growth companies, not Coke. Coke's not growing. They're big enough, all right? I want to find 2 or 3 big companies. It's not big companies, sorry. Growth companies. And I want to find 2 or 3 losers, and I want to do long shorts against them so that I have no market exposure, no beta risk, no sector risk, and if they're in the same currency, I have no currency risk. And then as they diverge from each other, whether the market's going up or going down, as they diverge from each other, I'll make a ton of money. So that's the play that I'm working on, and I need to put in more time and effort. But if you guys know anything about these companies, or if you want to join me and help analyze these companies, we can work together, find out what we can, and find the best 3 and the worst 3, and pit them against each other. And for the best 3, I haven't confirmed it yet, but I'm looking at CELH. Reed was another one that popped up, and NBEV. Now the trick is we got to figure out if they're overpriced right now. CELH looks like it's overpriced. It's starting to come down. What is a good point to re-enter? And then maybe we choose multiple points. We don't go all in at once. Maybe we come back in at 55, 50, 40, etc. while we short some other company in the food and beverage industry. Anyway, that's what I'm looking at doing. That's why they're on my list. And they had really solid financials when I looked at them. They have infinite runway because they're they're profitable, excuse me. Their earnings date doesn't come out for a while, so we can run a double wheel on that just fine. And their debt ratio is only 26%, while their revenue is up 77%. 70% for the year, 77% for the quarter. So I want to keep looking at them. I think while we're talking, Mr. Biden and President Putin are talking to each other. Putin is definitely saying whatever he wants to say. Very aggressive in his style. I watched only a little bit that was popping up on Twitter. Don't know what's really going to come out of that anyway. This gold ETF has not moved up much over the last couple months, or at least the last month. I mean, it did there, but not when I recorded it. CHM. This one did even less. Hey, Mr. Guy. Good to see you this morning. Thanks for being the first one to chat with us. Yeah, long term, I'm bullish on DraftKings, and I know it's got a lot of volatility. You can definitely wheel it. You can definitely do credit spreads, everything else against it. It is a very interesting stock. You have any plans for DraftKings? You doing any plays on it, Mr. Guy? Jumia. Excuse me. Jumia was that. How do I describe it? Jumia was the thorn in my side last year, not because I lost money on them, but they kept showing up on my wheel scans, and I loved everything about the company, except I didn't know anything about Amazon and Africa. The guy says, I have too many positions on. I feel you. I'm looking forward to this weekend. I'm looking forward to a bunch of things just expiring and having a cleaner slate. I am 100% right there with you, Mr. Guy. I have way too many positions on. Can't keep track of all of them. I'd be happy to downsize. By the way, Mr. Guy, I will tell you, the company I was looking at, it's a good thing I didn't tell you and you didn't follow me. You had asked what my secret company was. I was trying to get you to join the Discord channel. It was Hut 8 out of Canada. They've now got listing. They're about to get listed on the NASDAQ. They're a Bitcoin mining company who competes with Mara and Riot. You probably already heard about them anyway. And unfortunately, they are way down from when I bought in on them because, of course, Bitcoin came crashing down before they got listed, before they got approval. They're still not listed on the NASDAQ, but before they got approval and before they announced anything about the NASDAQ, Bitcoin came crashing down, and I'm down about $3.50 on a $4.50 share. I bought at 8, and it's at $4.50 now, so it's been a big drawdown for me. But I'm hoping with Bitcoin going up, if Bitcoin gets back up to 50,000, they get listed on the NASDAQ, I don't see any reason why they won't be a $15 to $20 stock. Guy says, there's always the question of whether it is better to spread the risk across many different instruments versus loading up on fewer names in which you have more conviction. Yep. The symbol should be HUT when it gets listed on the NASDAQ, but right now it's HUT MF. HUT MF. I've done a bit of research on them. They're sort of the undiscovered next Riot, next Marat. They're also going to be doing, they're using the runoff gas from mining rigs in North Dakota, oil rigs in North Dakota, because they have sort of a portable solution for their Bitcoin mining, and they've paired with another company. They also buy and hold a lot of Bitcoin compared to their balance sheet, and they expand when Bitcoin price is low. They buy up all the machinery, they buy up used machineries, as well as new machinery. I really like how the company operates, so do check them out. In fact, we can pretty much put them on the list here now. But I loaded up on them in a big way, and unfortunately, if they get to $16 or $20, I'm gonna have to sell some just to break even. I mean, just not to break even, but to free ride on it. I was hoping for a bigger win out of that one, but unfortunately, Bitcoin and the timing for their NASDAQ announcement did not line up, did not play ball. Hey, we got about 7 minutes before the opening bell. We've already scanned a few of the stocks. I told you guys what, if I didn't have enough, like Guy said, I've got too many positions on. If I didn't have too many positions on, I would be looking at Raya, Mara, Space, SPCE, and Tilray. If you guys are looking for companies, that's what I look at, as well as NEO. I don't think NEO showed up on here. But maybe if you either do Workhorse or do NEO, probably don't do both. You're both in the EV category. So I don't think there's a reason to wheel both of them. Pick your better one out of those. But like Guy, I have too many positions on. I didn't see anything super exciting in the scanner today that I haven't already have or want more of. So we're mostly going through and working, doing the real work, the real diligence of updating our spreadsheets, managing our positions, and that sort of stuff. Unless you guys have any symbols you guys want me to look at, I'm happy to look at them for you. And if you haven't been to Bali yet, I do recommend that you guys take some time to travel around the world. Make sure you get out of the U.S. if you're in the U.S. and experience what it's like to, not just a 1 week vacation. 1 week is nothing, all right? Try to line up a nice 3-month vacation somewhere. Give yourself a nice long vacation and see what it feels like to live in another country, because you'll be surprised, as long as they have your modern amenities, cell phone, Wi-Fi, internet, okay, it's not going to be that hard or that different to live in a quote-unquote third world country than it is to live in the US, and you're going to pay a lot less, which means you have a lot more time on your hand. You can run a business, you can trade stocks online, you can do lots of things, you can start a business. Lots of people start businesses in Bali. Lots of people open up pubs and restaurants and hotels and Airbnbs and everything else. There are, of course, laws and regulations to work through on that, but it's not hard. I mean, it's hard, but it's not impossible, you know. There's agents that help you do that. You pay them and they do the paperwork and help you do everything else. And then bada bing, bada boom, you're out of the U.S. and you can live someplace and go to like me, I live literally 5 minutes from the beach. I have a big villa, not a lot of land, but it's a very large building, 2 stories. It has a nice pool, a gazebo, kitchen, full-size kitchen, everything else. I pay $700 a month, and I'm 5 minutes at the max to the beach, okay? You show me a good place in California where you can do that paying $700 a month for a nice house. You might be able to do it in some places in Florida. Florida's got a lot of beaches. But to probably get that nice of a house close to the beach, nah, not within 5 minutes of the beach. 30 minutes to the beach you can do it. 5 minutes to the beach, probably not. And look, for whatever reason you don't like Bali, try Mexico, try Spain, try Thailand, try Philippines, try Portugal, try Colombia. There's lots of great places where that you can get away from the rat race, get away from the cost of living in quote-unquote first world countries. That the term doesn't even matter anymore, right? First world and third world. It's either developing or developed, right? And developed countries are expensive. They have a lot of rules. You don't feel that free. You know, in Nevada, anywhere in Nevada, the whole state of Nevada, if you get charged for public urination, if you just walk outside of a bar and somebody reports you or a cop sees you taking a little pee-pee in an alley, okay, you you will get charged with public indecency, which is which puts you on the sex offender list in Nevada and will ruin your career chances for the rest of your life. You will forever have to explain that. You will forever be on the sex offender list just because you took a pee-pee in public. Okay? So you feel more free in a country with less rules or less hassle, less cops hassling you, or just the stuff that goes on now. It's just not, it's not old American, you know? I consider myself a proud American, but when you can be on the sex offender list for life just because you took a pee-pee in public, come on. Do you think that's what our founding fathers wanted when they rebelled against the oppressive British? Do you think that's what they were after? I don't think so, guys. So, I mean, dude, check out, just be open-minded. Go visit some other countries. The guy says Greece. A lot of people go to Greece for the tax reasons and for it being in the EU. I forget why somebody said that that's not as good anymore. I think they're getting rid of some of the tax benefits of being there, or maybe it's harder to get a residency. But it's one of the places you can go, and it's part of the EU. Well, there's a lot of cheap, good countries you can go to, get residency, get tax benefits, open a company there that's also in the EU. And so if you ever, gives you a lot of benefits. You can still do banking quite easily, all this other good stuff. So a lot of reasons to choose those. Gibraltar's another place. Falkland Islands might be a place. There's a lot of places you guys can try. I go with the Southeast Asia. I like the people, and I love the cost. The cost of food here is going to be really great. I can eat really nice meals for $3 if I want to. Obviously, there's nice $10, $20. I just ate the other day at an all-you-can-eat Japanese barbecue place. Came out to 400,000 rupiah, which is $28 for me and a friend. Ooh, opening bell. It's red across the board. Everything except Disney and MU, which are my quote-unquote safest stocks, are down. Mara's down a full dollar from the 30s to 29.84. NBEV down 3 cents. Everything else is down just a little bit. Tesla down $3. Now at 5.96. It was about 6.10 this week. Now we're down to 6.96. That's not good for me, because I have a lot of it in a margin account. Space is down 38 cents, but you know what? They've had a massive run up from 18, which is where I bought a bunch. I sold a bunch at 24, 25 when Richard Branson sold his. I think I have some cost basis in the 18s, or sold some puts in the 18s and 21s. Now it's at 34. That's fantastic for me. But it's coming down a little bit. Kodak down 18 cents. That sucks. I want that to get called away. But you know what? If that survives another month and gets called away later, that wouldn't be terrible for me either. That expires in 2 days. I have to sell another covered call on that. I was kind of looking forward to opening up the cash and putting it someplace else. I could always just sell it if I wanted to, but I'll run another covered call. Mara down 70 cents. Riot, where's Riot? Riot's down 67 cents. They're almost in perfect lockstep. You say Mara's actually down more, and it's a lower price stock. NBEV down only 3 cents, but they're a $2.46 stock. ARCG, which is my favorite of the ARCs because I want to be exposure to genomics. I don't need to be in the other ARCs. They might have too much Tesla or other things that I don't care about. They're down 10 cents. Alright, let's look at what's expiring soon and see if we need to do any early closings or anything. Geo, I got a cover call at 7. I don't care if it gets taken away, I'll just let it ride. Kodak at 10, same thing. RIGL, basically all my covered calls, I don't care if they get taken away. I could probably close this one for a penny though. But it closes in 2 days. Yeah, I guess we'll put it in for a penny. Why risk anything for $1? Only made $15 on the covered call anyway. Waste of time. Hey, I like today's music selection. How about you guys? Got a $75 put on MU. Close it out for 3 cents. I'm gonna put it at 2 cents. Good to close. Closes early for $2. I already have one working. I already have it at 2 cents. Hey, I already did it. I read my own mind. Sage could have closed that one early. I think it got down to as low as 15 cents, and then that thing tanked like a rock. That's okay. It shot up to like 70, 75, and we sold a $50 put. Look at this. Woo! That is a massive drop from 80 to 58 in just a few days. Wonder if I should panic. Space. Can't quite close those early enough yet. But those still got 20 and 30 days left on them. Well, it looks like across the board we don't need to manage too much. How are you doing, guy? How are you doing over there, guy? Having a pronoun for a name throws me off, man. I'm sure everyone else gets it with me too, because I'm Bud. Bud's a bit of a pronoun. Yeah, I said it fine, but where to put it in the sentence was grammatically weird. I had to redo it a couple times. Voozy turned out to be a bit of a loser for me. I'm in at $20.98, currently trading at $16.72. I sold the $24 call, but that's not going to happen. Got 30 days left on it. I got $1 out of it. It's already down to 30 cents. I really probably should close that earlier, roll it forward. Probably take it more seriously on Friday. Poly, I sold the $35 call. That's going to get assigned and taken away. I'm going to earn a little bit of premium on the put, and then some premium on the call, and then I'll be free of that one from Plantronics. I thought that was going to do a lot better. I didn't think I was going to get assigned on Plantronics. I guess technically you don't think you're going to get assigned on any of them, but you have a bit of confidence level. You're thinking, this one I've got this percentage chance. I thought that I had a very low chance of Plantronics getting assigned, but it got assigned. What happened? What did I do? Sometimes this hides some of my symbols, and I never know why. I didn't change the account. Alright, let's not worry about the bugs of Tastyworks. Let's go see. Let's go look at some of our positions or some of our watch list stuff and see see if there's any new ones that we'd want to open. CLH, I'm not going to probably do that one right now, even if I had a good IV. IV is 87% in 30 days. Yeah, it's not that high anyway. It's 1% at the 45. 2% at the 50. You get $1 on 50. Currently trading at 63. If I went 20% out of the money, I'd need at least $15 out of the money, which would be about 50. So you're getting about 2% return. I'd rather get 4. I'd much rather prefer 4, I should say. So we're going to let that one continue to play out its price action and then see if there's a better time to open that later. Apps currently trading at 69. I need a $14 discount, so if at the 55, only getting 65 cents. Call it 70, you can probably get it. That's only 1 1/4. It's not enough for me to worry about. You can always go for less distance. You can go 10% out instead of 20% out, especially with these companies that have such good fundamentals. There we go. Zedge looks like it might fit the bill. Again, 0.70, but on $15, that's a 4.6% return. That's much better. Break even of $14.35 versus at the money $17.50. That's your 18% discount, including your 4.6% ROI. Kind of an all-time high, though. Yeah, definitely an all-time high. And if you did break even, get back into it, you'd be right about here. When really you want to be right about here. So you need $3 more on that discount. NVIDIA only an IV of 35%, but probably going to get a lot of margin on that. Yeah, you're getting 4-to-1 margin, 25%. If you think about it on a cash basis, you're only getting 1.7%, 1.8% return on NVIDIA, but if you margin it, you're basically getting 4 times that amount. You'd be getting 7% in a month if you sold the 680. But it has a nice jump there. Previous peak was 643. Too scary for me. Nine 9:42. Only 3 minutes left on the clock, guys. Do want to remind you, check out theoptionsoracle.com. They've got a free newsletter coming out this weekend. Well, there's a free trial, so their newsletter comes out this weekend on Sunday. So if you sign up for the free trial, you will get that. So make sure you take advantage of that. MU has some earnings coming out June 30th. Not enough IV. Well, the reason I did these guys last time is because of the buying power effect. That is crazy. What? But look at this. If you sold $1.04 at the 75, the buying power effect is only going to tie up $1 on Tastyworks on your margin. Oh no, it's because I have another piece in there. Never mind me. It's because it's leaving over my what I was previously looking at. That's why it was so weird. But look at still, you get so much margin on this MU. Getting 8-to-1 margin on MU. So even if you make 1%, if you margin that for whatever your amount you're willing to risk, you'd be getting 8% instead of 1%. Just don't let it go against you, because then you're losing 8 times as much as you would hope to lose. Could still do the $7 BNGO. That's not much of a discount. Alright boys, looks like I'm not opening up any positions today. That doesn't surprise me. Our scanner didn't turn up anything new or exciting compared to what we did on Monday. That's just the way it goes sometimes, guys. It's not always super exciting. You know, if you're trading every day, you might have a bad habit. Anyway, it's 9:45. I want to thank you, and I appreciate you guys staying tuned with us. Make sure again, like, subscribe, bell, and most importantly, share it with your friends. Okay, guys? And yeah, I will see you guys on Monday. Like I said, check out theoptionsoracle.com. And hey, if you don't have a spreadsheet like this, you should consider making one. This is the real work that you have to do so that you know what to do when the timing's right? Like, I don't know, doing these live shows is kind of interesting because sometimes it might feel a bit boring, but that's because I'm not making this super scripted hype video where I'm trying to get you guys all super excited to buy a stock or pump something. This is the real work that goes into trading stocks. So if this is boring to you, guess what? Work is boring sometimes. That's why it's called work. Anyway, guys, what's not boring is going to the beach every day in Bali, going to sunsets, going to the mountains, going to hot springs, spending the day how I want to do it. And I hope that you guys take this opportunity to learn what I'm trying to teach you guys so that you can make money anywhere in the world. It doesn't have to be Bali. And you can escape from the developed country syndrome and go find out how free and wonderful and cheap it is to live overseas. So stay tuned to the Fox with Stocks channel. If you know anybody else complaining about their job, tell them to come watch this. There's no reason. If you really hate your job, you could be out of there within, for sure, less than 5 years. You could retire. I want to say this. If you listen and learn to what I teach, you could retire in 5 years. I'm not saying it's easy. You'd have to cut costs a lot, okay? But if you're willing to work hard and cut costs and invest, there's no reason you can't retire to Mexico, Bali, Thailand, etc. in 5 years. Now, do you want a 30-year retirement plan or a 5-year retirement plan? Okay? If you don't like that, guess what? You can come here and you can actually work and live someplace better and leverage your time. Anyway, guys, I'm going to leave it at that. I'll see you on Monday. We can talk about it more. Cheers.